All right, I'm going to take a look at gold, and I'm going to say I'm starting to get a little bit nervous that we may be about to experience another attack on the metals. This used to be pretty commonplace a couple of years ago. During intermediate declines, the banks would manufacture a big attack, create a bloodbath phase, exit the shorts, get long. But it hasn't worked since the summer of 2018. They keep getting caught in these short squeezes. But I'll show you what I'm looking at here, and this has got me a little nervous that they may try again, and I want to be prepared for it just in case it does happen. So the first thing is we're starting to get kind of late in this daily cycle here, and we're not making a lot of progress. The other thing that has me a little nervous, everything was okay until Wednesday. On Wednesday, we got a nice move back above that 1923. That's the breakout from the 2011 high. And it looked like we were set to start to get some upside follow through. And we've got a pattern of lower lows and lower highs developing in the dollar. So the dollar is trending down. The problem that was materialized at that point anyway, the dollar made a lower low, and during this period here, the dollar was in a strong downtrend. So I started to have some warning bells maybe going off on Wednesday when gold couldn't, and actually, there was just an attack to prevent it from making a higher high. So even though the dollar made a lower low, gold was prevented from making a higher high right here. So a little bit of a warning bell going off on this day here. Gold should have made a higher high. And then we got an early morning attack. I think it was about 7,000 contracts. And that's the kind of stuff we used to see 2 years ago, pre-market attacks. And we got one of those on Thursday. And that drove gold back below that 1923 breakout. So that was another big warning flag on Thursday. And then on Friday, another one. The dollar was down on Friday, and they pinned gold. Actually, by the time the futures market closed, it was also down. So another warning bell going off. And so here's another one. During a period when gold was trending up and the dollar was trending down, the mining stocks have just been attacked, and they are in a downtrend here. And we're seeing buyers try and come in and push the miners back up, but unless gold can break free and give us another higher high, this is probably suppressing the buying pressure in gold, in that they have manufactured a downtrend in the miners. So another warning sign that they may be going to try again to manufacture one more failed daily cycle in gold. So I'm going to make a strong suggestion. We've got to pivot here in the miners, and even though we've made a series of higher highs and higher lows here, that is in jeopardy of being negated if they can drive the miners below this pivot right here, which is I think it's about 3807. So if they can get GDX below 3807, they're going to take out a lot of technical buying, and the door is going to be open for them to stage an attack on gold. All right, so those same two pivots right here. This is a minor downtrend. This is the lowest pivot. I think this is at about 1877. So I would suggest putting a stop below that. If gold goes below that early next week, that's another warning sign. Definitely if it goes below this pivot, which I think was 1877, then they have managed to abort the rally in gold, and they're going to try and run an attack and then try and run gold below this level here. And at that point, then the next level of support comes in here between 1825 and about 1800. They will probably try and run gold down to that. So you got a couple of really close stops here at 1877 and for sure, or I'm sorry, 1887 and then definitely at 1877. I think I would just stop out, get out of the way, and see what happens. And if they can close it below this 100-day moving average, that would be it would take out even more technical buyers. So we'll have to see what happens on Monday. Kind of hard to believe that they can do this with the dollar in a downtrend, but this is one of the things you have to be aware of. Other than the currencies, the metals are a fairly heavily manipulated market, and there are some warning signs that they may the banks may try and break this daily cycle and try and run it down and give us one more lower low before we get our intermediate cycle low, even though we've clearly broken this intermediate trend line. So a couple of stops are in order, I think, on the metals, just as protection in case the banks succeed in breaking this daily cycle and then manufacturing one more lower low.